Right, good morning, students. It's 9 o'clock. Let us get going, please. Right, just to welcome you guys to lecture number 8 for FAC 1501, which will also be your last lecture then that we will do online. Just a few things just before we get going, guys. Just a reminder, guys, to switch off your camera and mute your microphone. Please, in the chat, please indicate your student number and then have the notes ready then for today. Today's notes has been emailed to you. You must have a PowerPoint presentation on bank reconciliations. You must have notes for lecture number 8. And you must also have the worksheets or the answer sheets then for lecture number 8. If you experience any technical issues, guys, please don't mention it here. There's nothing I can do for you. Just send an email to ctntat@unisa.ac.za and they will try to resolve the matter. Okay. If you have not received the notes, remember, if you go onto the Teams and you go onto your, there's an icon for notes. I have also downloaded the notes there, so you can get the notes there. And then at the end of the session, guys, we will appreciate it if you can just get back to on Teams and the icon next to notes. There's an icon for your feedback form, and we will appreciate it if you can just complete the feedback form, and then you just return that to us. Right, guys. We are continuing now with our next lecture, guys. And our next lecture deals with bank reconciliations. And I'm turning you to the PowerPoint presentation that just deals there with the bank reconciliations. Right, guys. So when we speak about bank reconciliations, the purpose of doing a bank reconciliation statement is to ensure that the balance of the bank account in the books of the business correspond with the balance on the bank statement. So when we talk about the balance on the bank account, then we are referring to the balance as per the bank account in the ledger. That bank account that you do in the ledger where you will have a balance, that balance should be the same as the balance on the bank statement. A bank statement is the statement that you get back from the bank that will explain to you what has happened as far as your bank transactions is concerned, inflows and outflows, and then also, guys, what is the balance then on that bank statement. Can you guys see me or not? Okay, I'm not too sure. Okay, right, we continue, guys. So, in order for us then to do the bank reconciliations, you need to understand.
Sorry, sir. Sorry, sir.
Yeah, I'm listening.
I can't see you. I can't see you. I see nothing.
You see nothing?
Yes, sir.
Okay. Can you see me now?
No,
You can't see me.
I can't see you. I just hear you.
Okay, you can just hear me.
Yes.
I think you must. Okay, Pumza, I think you've got
Yes,
a technical issue, which maybe there may be something perhaps wrong on your side, but all the other students are okay. Can I just get a confirmation there, guys? Are you, or can you guys all see me?
Yes, we can see you, sir.
Okay,
Yeah,
can you
see you?
Yeah.
Okay, can you see the notes?
Yes, I can see you, sir.
And the notes, can you see that?
Yes, sir.
Okay, no, okay.
Yes.
So I think Pumza, there's just maybe something wrong on your side. Right, guys, we continue.
Yes, we can continue.
Okay, so As I said there, guys, we are comparing the balance in your bank account as to the balance on your bank statement. So when we speak about the bank reconciliation, guys, the bank reconciliation, the process, we have got two phases. Firstly, we take a look at what is recorded in the business's records. Okay. And then we take a look at what information is recorded on the bank statement. Now remember, the business's records or cash transactions consist of the cash receipts journal and the cash payments journal. The bank, which is now the financial institution, they supply you with a bank statement. So firstly, you need to see what is in the business's records that is not onto your bank statement, and what items appears on the bank statement that is not in the business's records. So if you come across any entries that appears only on the bank statement, it's only on the bank statement, it is not in your records as yet, you will have to record that in your cash receipts journal and your cash payments journal, and we call that the supplementary entries in the journal. The second process is that if you come across any entries that is in our records, meaning that we have got some entries in our cash receipts journal and in our cash payments journal, but it is not yet on the bank statement, those items we record in the bank reconciliation statement. So those are the two phases that we have here with bank reconciliations. The next important thing that we must touch on is our bank balances. When we speak about the bank balance, we are sitting here with two balances. We are sitting with a bank balance in the books of the business, and we have got a bank balance which the bank has sent us, which is the balance on your bank statement. From the business perspective, you go to your bank account in the ledger, and if that bank account has got a debit balance, then bank is classified as an asset with a debit balance. A favorable balance is therefore a debit balance. However, in your bank account in the ledger, if that balance is credit, means that bank is classified as a liability. We call that an unfavorable balance. That is an unfavorable balance. However, from a bank's perspective, the bank tell you what is the balance on your bank statement. If you have got a credit balance on the bank statement is classified as favorable balance. Because if you have got a credit balance on your bank statement, it means that you've got money in the bank. It is indicated as a credit balance because the bank is giving you that bank statement. From the bank, you are a creditor. And if your balance is unfavorable, it is a debit balance. Those are the balances from the bank statement. A credit balance is favorable and debit balance is therefore unfavorable. So you need to understand that we've got balances from the business point of view, and we've got a balance coming from the bank. The balance from the business point of view is the balance in your bank account in the ledger. However, the balance from the bank statement is the balance according to the bank, according to the financial institution. Right, guys, we continue with that. So we are now going to take a look at the steps to follow whenever you are doing bank reconciliations. Step number one, guys. In step number one, you prepare a cash receipts journal, only with a detail column and a amount column. And you also prepare a cash payments journal. You then prepare a bank account in the ledger, and you prepare a bank reconciliation statement. Please note the following, guys, that when it comes down to actual exams, then remember for FAC1501, you are issued with answer sheets. So you don't need to prepare these things. But when you are practicing now, then you must open up a cash receipts journal, a cash payments journal, a bank account, and a bank reconciliation statement. In your next step, guys, you go to your bank statement and you record the balance on the bank statement on the last day. Take a look at the balance on the last day on the bank statement, and you record that balance in your reconciliation statement. If your bank statement reflects a credit balance, it is favorable. If it's a debit balance, it's unfavorable. Sometimes in a question paper, they will tell you credit balance as per bank statement, or sometimes they will tell you a favorable balance as per bank statement or unfavorable. It is important, therefore, for you to know when is the balance favorable or when is the balance unfavorable. In your next step, guys, we are now going to compare the cash receipts journal with the credit side of the bank statement. The reason why we compare these statements, guys, is that we are looking for items that appears in our records that is only on the bank statement or that is not on the bank statement, and we look for items that appears only on the bank statement that is not in your cash receipts journal. If you come across any amounts in the cash receipts journal that is not on the bank statement, so we've got the amount in the cash receipts journal, but it is not yet reflected on the bank statement, you enter those amounts now into your bank reconciliation statement. In your bank reconciliation statement, you will have under your details, you will write there credit outstanding deposit, and you will record that entry, the amount on the credit side of your bank reconciliation statement. If you are now comparing the cash receipts journal now with the bank statement, and you come across any amounts that is on the bank statement, but it is not yet in your cash receipts journal, you must then enter those amounts in your cash receipts journal. You must now enter those amounts in your cash receipts journal. Examples of those amounts will be the following: direct deposits for rent or payments from clients. Direct deposits. Sometimes, guys, we will have a trade receivable, a customer that owes us money. However, he don't come to the business to pay his account. He goes straight to the bank and he deposit that now into the bank there because he's got our banking details. Now, because he deposited the money directly into our bank account, that amount will appear on the bank statement. It is not yet in our cash receipts journal. That is why you go to your cash receipts journal and you will have to make an entry in your cash receipts journal for that amount. Other examples will be interest on fixed deposits and interest on the current account. That is now if the bank is paying us any interest. So those amounts will then be recorded now in your cash receipts journal. Next step, guys. Now we take a look at our cash payments journal and we compare the cash payments journal with the debit side of the bank statement. The reason why we're doing that, we are looking for items that appears in the cash payments journal that is not on the debit side of the bank statement, and we look for items that appears only on the bank statement that is not in your cash payments journal. If you come across any amounts in the cash payments journal that is not on the bank statement. Amounts, it is in our records, not on the bank statement. You enter that now into your bank reconciliation statement. So in your bank reconciliation statement, you will have an entry under your details. In your bank recon, you will write there debit outstanding checks. You record the amounts on the debit side of your bank reconciliation statement, but you will have to indicate the check numbers and the amounts for each individual check. Okay? For each check, indicate the check numbers and the amounts for each check. If you come across amounts that is on the bank statement, that is not in the cash payments journal, you enter that now in your cash payments journal. Enter that in your cash payments journal. Items that may appear on the bank statement that is not yet in your cash payments journal will be items such as bank charges, interest on overdraft, debit orders, and dishonored checks. Let me just speak about each one for a short period here, guys. Bank charges. Bank charges is the collective account, guys, for all transactions, all costs that the bank is charging you. So whether it is a service fee, the cost of a checkbook, a cash deposit fee, the cost of a deposit book, right? Monthly service fees, anything like that. You add all of that up and you call that bank charges. The interest on overdraft, guys, is a separate account. Remember, interest on overdraft is what the bank will charge you because your account is overdrawn. Debit orders. Debit orders, remember what is a debit order? A debit order is where you have actually given the bank an instruction to make a payment on your behalf. So you can pay your insurance, or you can pay your loan, or you can pay your DSTV, whatever you pay that via debit orders. That debit orders has gone off on the bank statement, but it is not yet recorded in our cash payments journal. That is why we record that then in your cash payments journal. The next important item, guys, will be dishonored checks. Dishonored checks. A dishonored check, or we commonly call that a RD check, guys. RD means refer to drawer. That is a check that we commonly say that check is bounced. If somebody wrote out the check and he never had enough money in his banking account to cover that amount, or sometimes there's something wrong on the check, then the bank will not honor that check. A dishonored check, guys, you record in your cash payments journal. Remember, when a customer paid us with a check, we received the check in good faith and recorded it in the cash receipts journal. However, if the bank now informs us that that check has been dishonored, they will not pay the money to us, we must cancel the receipt. And that is why you've got an entry now in your cash payments journal. Okay, guys? So if you come across any items that is on the bank statement that is not yet in our cash payments journal, you will have to record that in your cash payments journal, such as bank charges, interest on overdraft, debit orders, and dishonored checks. Right. There are a few other items that you must consider, guys, when you do your bank reconciliations. Firstly, you can get errors. Sometimes the bank is making an error. So, if you come across an error on the bank statement, you rectify that in your bank reconciliation statement. Now, what are the kind of errors that you can get? You can get an incorrect deposit. An incorrect deposit will appear when somebody else's deposit appears onto your bank statement. So the bank has incorrectly increased your balance. It's not your money, but the deposit reflects there on your bank statement. You rectify that in your reconciliation statement, and in your reconciliation statement, you will write there, debit incorrect deposit, and you record the amount on the debit side. You can also get the situation, guys, whereby there's an incorrect check onto your bank statement. Somebody else's check appears onto your bank statement. You will inform the bank. You do the correction of the entry in your bank reconciliation statement. In your bank reconciliation statement, you will write there credit incorrect check, and you record the amount on the credit side. That will now take care of errors on your bank statement. Sometimes you can also get errors in your journal. In your cash receipts journal, perhaps there's an error, or in your cash payments journal, there's an error. Sometimes in your cash payments journal, you record an amount perhaps of 1,800, but the actual value of the check is 1,500. So you recorded 300 Rand too much in your cash payments journal. So the first scenario there is, if the amount in the cash payments journal is too much, you were only supposed to record 1,500 for a check. However, you recorded 1,800 Rand. Then you recorded 300 Rand too much in your cash payments journal. To rectify that error, the difference, which is 300 Rand now in my example, you record that in your cash receipts journal then. That will then be a correction of error. But sometimes in your cash payments journal, you record too little. The amount on the check is too little. Say now you must pay for repairs 1,200 Rand, and in error, you just recorded 1,000 Rand in your cash payments journal. Then your cash payments is 200 Rand too little. The amount that you recorded in the cash payments journal is too little. To rectify that error, you will record the difference, which in my example is now 200 Rand. You will record that now in your cash payments journal, and you will make an additional entry then for the 200 Rand there. Okay, guys, that is how we will deal with errors. In your additional information, sometimes you will also come across a stale check, guys, a stale check. A stale check is a check that is older than 6 months. And because the check is older than 6 months, the person who we wrote out the check to, he can't do anything with that check. That check must be cancelled. A stale check must be cancelled. You cancel that check now with an entry in the cash receipts journal. So a stale check must be cancelled. And if you cancel a check, it is an entry in your cash receipts journal. But guys, those are the other items that you must consider. So now in step number 5, guys, we have completed our cash receipts journal. We have updated our cash payments journal now. We are now going to prepare a bank account in the ledger. So if we prepare now a bank account in the ledger, you start the bank there with your opening balance in your bank account. Remember that balance can be a debit balance or a credit balance. Then you complete the bank account in the ledger. You take the amount from the cash receipts journal to the debit side of the bank account. And under your details, you write there, total receipts. Then you take your total of your cash payments journal, the new total on your cash payments journal, and you transfer that to the credit side of your bank account. And under your details, you write there, total payments. Now you balance the bank account. And if you balance the bank account now, you basically calculate now what is the bank balance according to the business's records. In your step number 6, you take that balance now that you have just calculated on your bank in your bank account. You transfer that balance now to the bank reconciliation statement. You can either have a debit balance as per bank account, or you can have a credit balance as per bank account. So you enter that amount now. Okay. And then, guys, in your bank reconciliation statement, you add up the debit side and you add up the credit side. The two amounts should be equal. If the amounts are not equal, guys, it means that your bank reconciliation statement does not balance. For exam purposes, guys, you don't go back and still to go look for where you've made a mistake. You haven't got time for that, guys. You just leave the question as it is and you move on to the next question. Remember, you don't get any additional marks if it balances, or if it doesn't balance, you don't lose any marks. So don't waste your time to go look why it doesn't balance and where you've made a mistake. This is exam conditions, guys. You are not going to get that mistake. Just leave it and move on to the next question. Right, guys, that is now a summary of what you need to understand under bank reconciliations. We are going to apply that now, guys, by taking a look at the notes that I've given you. And there is a question there in your notes, and we take a look at that first question now. Okay, guys, I'll be with you right now. Right, guys, turn to your notes. It's called question 3, guys. It's a business called LR Stores. The business, guys, there is called LR Stores. Let us just take a look at that information quickly. On the first page, guys, they supplied you with a bank statement. A bank statement normally has got 3 columns. There's a debit column that will decrease your balance, and that is normally where all your checks and your bank charges and so on will appear there. On the credit side, that is where all your deposits will appear, and a credit will increase your balance. You see there was an opening balance of 45,150 plus a deposit of 21,000 will make your balance now 66,150. Then the question gives you a cash receipts journal. On the next page, the question will give you a cash payments journal together with your additional information. And the question asks you, prepare a cash receipts journal and a cash payments journal. Prepare a bank account in the ledger, and thereafter they ask you prepare a bank reconciliation statement. Okay. So that is the question that we've got, guys. So what we are going to do now is let us take a look at the approach to the question, guys. I've given you guys an answer sheet. And if you come across a question like this in the exam, your approach is you go to your required at the end of the question, see what you must do. So the question wants you to complete The supplementary entries in the journals, you must do the bank account and you must do the bank reconciliation item, statement. Prepare the items in your answer book and then you follow the steps with bank reconciliation. Right, so you must do a cash receipts journal, a cash payments journal, a bank account, and a bank reconciliation statement. With the steps, guys, under step number 2 that we had there, I said that you must take the balance on the bank statement on the last day of the month. So go to your bank statement. And on my bank statement, I see that my balance on my bank statement, the closing balance at the end of the month is 181,665. I record that now in my bank reconciliation statement. That was step number 2. In my bank reconciliation statement, I will write the credit balance as per bank statement. And my credit balance in my bank statement is the amount of 181,665. Step number 2, guys, transfer the balance there on the bank statement on the last day. You transfer that to your bank reconciliation statement. Right, guys, step number 3. In step number 3, we are now going to tick off. We are going to compare the cash receipts journal. Compare the cash receipts journal with the credit side of your bank statement. So guys, this is a tedious process. I know this is a tedious process, but you must just please bear with me on this one. I am now going to tick my cash receipts journal to see if those amounts appears all on my bank statement. So in my cash receipts journal, the first amount of 21,000 is there. The next amount of 21,000, there is a 21,000 also on your bank statement. Remember, we are comparing the cash receipts journal with the credit side of the bank statement. The next amount of 15,500 is there. The next amount of 30,000 is there. The next amount of 15,000 Rand is there. The next amount of 40,000 Rand is there. 26,500 is there. But the last amount of 5,000 Rand is not there. Just check for me on that one, guys. On your bank statement, there is an amount of 5,000 Rand. But take a look at the date there, and that 5,000 Rand is dated the 28th of March. However, in the cash receipts journal, there is a 5,000, but that is the 5,000 Rand that was only deposited on the 31st of March. So that is a different amount to the 5,000 that you see there on your bank statement. So in your cash receipts journal, you have now marked off that the 5,000 appears in the cash receipts journal, but not on the bank statement. So now we are comparing now the bank statement. So we make the ticks now on the bank statement. First amount of 21,000 is there. The next amount of 21,000 is there. 15,500 is there. 30,000 is there. 15,000 Rand is there. 40,000 is there. But the 5,000 Rand dated the 28th of March is not on in your cash receipts journal. So you mark off that one. 26,500 Rand, guys, that amount is there. 90 Rand is not in your cash receipts journal, and 15,000 Rand is not in your cash receipts journal. So guys, what I've done now is I have compared now the information to see what information is in the cash receipts journal that is not on the bank statement, and what items is on the bank statement that is not in my cash receipts journal. So, in my cash receipts journal, there is one amount of 5,000 that has been marked that is not on the bank statement. On the bank statement, I've got three amounts that I've marked now. There's a 5,000, a 90 Rand, and a 15,000. Right, so we move on, guys, now to the next step. We are now going to record those items. If you come across any amount, guys, that is on the bank statement or any amount that is in our cash receipts journal that is not yet on the bank statement, we are going to record that now in our bank statement, and you will write there, credit outstanding deposit. It's an outstanding deposit. It appears in our records. It is not yet on the bank statement, and that is the 5,000 Rand that I spoke of earlier. It's in our cash receipts journal, not yet on the bank statement. So, in my cash receipts journal now, I am going to record the items that appears on the bank statement that is not yet in our cash receipts journal. So we need to make the supplementary entries in our cash receipts journal, update our cash receipts journal. Our cash receipts journal started off with 174,000 Rand. Our cash receipts journal there, guys, started with 174,000. That was the money which the business has received during the month. But besides that money, we have come across three items: the 5,000, the 90 Rand, and the 15,000. Let us account for that quickly, guys. The 5,000 Rand first. Under your additional information, they tell you there under number 2, guys, the credit entry for 5,000 Rand on the 28th of March in the bank statement was a direct deposit made by a client. So the client didn't come to us to pay the amount of money. He went to the bank to deposit the money directly into the bank account, into the business's bank account. So in our cash receipts journal, we will now have an entry for that Mr. A. Rose has paid us. So you will have A. Rose, and A. Rose paid us 5,000 Rand. We call that a direct deposit. Also in the cash receipts journal, guys, there is a 90 Rand that appears only on the bank statement. We must enter this now into our cash receipts journal, and the details will tell you that that is interest income, or you can have interest on current account. That's the money that the bank has paid us because we've got a positive balance. The last amount there, guys, is the 15,000 Rand. 15,000 Rand. I am now looking, guys, for information of that 15,000 Rand. Take a look at the information back in number 4. Under number 4, under your additional information, they tell you that the credit entry on the 31st of March in the bank statement was erroneously credited, incorrectly, in error, credited to LR Stores. It was actually a deposit which was made by RL Stores. Our business is called LR Stores. The bank in error recorded an amount of 15,000 Rand onto our bank statement. This is an error on the bank statement. An error on the bank statement we rectify in our reconciliation statement. Just refer to your notes, guys. in that PowerPoint presentation, if there's an error on the bank statement, we rectify this by an entry in your reconciliation statement. It's an incorrect deposit. So you will write the debit, correct deposit, debit, incorrect deposit, record the entry on the debit side, and the amount is 15,000 Rand. 15,000 Rand, guys, onto the debit side of your bank reconciliation statement. So guys, I have now completed the entry or the comparison between the cash receipts journal and the bank statement. I was looking for items that appears only into our records that is not yet on the bank statement. And we were looking for items that is on the bank statement that is not in the cash receipts journal. But guys, I'm going on to my next step now. And in my next step, I must now compare the cash payments journal with the items on my bank statement. Compare the cash payments journal now with the debit side of my bank statement. So if I'm going to do the comparison now, guys, and I'm ticking in my cash payments journal, the first amount of 4,500 Rand is there. The next amount of 900 Rand is not there. The next amount of 500 Rand is there. 6,700 Rand is not there. 40,000 Rand is there. 2,000 Rand is there. 500 Rand is not there. And 1,900 Rand is there. And 55,000 Rand is not there. So, in your cash payments journal, you have indicated now that check number 218 for 900 Rand, check number 220 for 6,700, check number 223 for 500 Rand, and check number 225 for 55,000 Rand is not on the bank statement. Go to your bank statement now, and we make our ticks now in the bank statement now. The first amount on the debit side of your bank statement is 4,500 Rand. That is there. 25 Rand is not there. Tick off that one. The 500 Rand for check number 219 is there. The next one is check number 221 for 40,000 Rand. That is there. Check number 222 for 2,000 Rand is there. The 1,900 Rand is on in our cash payments journal. 1,500 Rand is not there, so you can mark off that one. 2,100 Rand is not there. You can mark off that one. And 50 Rand of bank charges is not there. So guys, from your bank statement, there are 4 amounts that is not into our cash payments journal. That will be a 25 Rand for service fees, a 1,500 for a debit order, a check number XX900 for 2,100, and bank charges for 50 Rand. Right. Items that appears in the cash payments journal that is not yet recorded onto our bank statement. We will record that now into our bank reconciliation statement. And in your bank reconciliation statement, you are going to write debit, outstanding, check. Debit, outstanding checks. The checks is outstanding because when we issued the checks now to the people to make certain payments. They have not deposited those checks as yet. You must indicate the check number. Check number 218 is outstanding, didn't come through the bank as yet, and the amount of that check is 900 Rand. The next outstanding check, remember we have indicated, we identified 4 outstanding checks. The next outstanding check is number 220 to the amount of 6,700 Rand. The next outstanding check we have identified to be check number 223, and the value of check number 223 is 500 Rand. And the last outstanding check, remember we had 4 outstanding checks, was check number 225, and the value of that check was 55,000 Rand. So the items, guys, that appeared in the cash payments journal that was not yet on our bank statement, we recorded that in our bank reconciliation statement, and we call those items now our outstanding checks. In your reconciliation statement, you will indicate that, and you will call that under your heading, debit your outstanding checks. The individual check numbers and the amounts must be indicated. Next now, guys, we are going to take a look at what items appears on the bank statement that is not in our cash payments journal. We are updating the items now in our cash payments journal. If we update the items now in our cash payments journal now, we're going to update those amounts. Our cash payments journal has started off with an opening total of payments of 112,000 Rand. The amount there was 112,000 Rand. Remember, we have now marked off 4 items. The first item will now be, we will record now, bank charges. And our bank charges, guys, will be the 25 Rand indicated on the 2nd of March for service fees, as well as a 50 Rand bank charges right at the end of the month, and that will give your bank charges the amount of 75 Rand. The next amount that we have there is 1,500 Rand. We are looking for additional information on that 1,500. You will find the additional information under additional information number 3. The debit order for 1,500 on the 31st of March on the bank statement was in favor of MDL insurers for the monthly insurance premium. The expense that we are paying is insurance, and the amount of the insurance is 1,500 Rand. Okay. The last item that must be updated now in our cash payments journal, guys, is there was an amount of 2,100 Rand. Now we are looking for information on that check there of 2,100 Rand. Check number XX900. Go to your additional information under number 5, additional information under number 5, and under number 5 they tell you there that check number XX900 originally received from Mrs. B. Smith was deposited during the previous month. However, the check was dishonored. It's a RD check, a check that bounced. And it was dishonored by the bank because of insufficient funds in Mrs. B. Smith's banking account. So Mrs. B. Smith wrote out the check for 2,100 Rand. However, she never had that amount of money in her bank account to cover the check. Therefore, we will now make an entry in your cash payments journal for the dishonored check. We will write there, Mrs. B. Smith. Brackets, you can indicate there, that is the check dishonored. And the value of the dishonored check is an amount of 2,100 Rand. Right, guys. So now we have compared the cash receipts journal, the cash payments journal with our bank statement. We have identified where the errors are, or what items appears in our records that is not on the bank statement. We have updated our cash receipts journal, and our cash payments journal has been updated. And we have also completed our bank reconciliation statement. I am now just going to complete the items over there, guys, the cash receipts journal. And my next step is now I must do and prepare a bank account. So let us take a look at how we are going to do that now. So in my cash receipts journal now, guys, I will have to enter now. I need to add up now all my the amounts in my cash receipts journal. And if I add that now up, guys, I will get 179,090. 179,090. That is the amount then in my cash receipts journal if I add up those amounts. Just quickly add up that. I have added up now. My amount in my cash receipts journal is now 179,090. I add up my cash payments journal. And when I add up my cash payments journal now, the amount in my cash payments journal, you add up 112,000 plus the 75 plus 1,500 plus 2,100, and that will give you 115,675. We are now going to prepare our bank account. The bank account in the ledger, guys, bank account in the ledger has started off with an opening balance. You will get this under additional information number 1. The opening balance in your bank account is 45,150. Opening balance in your bank account, 45,150. The total receipts from my cash receipts journal, my total receipts, 179,090. Remember, that was the amount when we added up our cash receipts journal, 179,090. Our cash payments journal, 115,675. 115,675. We are balancing our bank account now. Add up the debit side. Add up the debit side. 224,240. To add up put that amount on the credit side, 224,240. And you will calculate now the difference between the two sides, which is your balance carry down, 108,565. 108,565. And the first day of the next month, which will be the month of April, in the month of April on the 1st, you will start your bank account with a new balance. The balance in your bank account is 108,565. 108,565. Right, guys, that is the section where we had to complete the bank account. Start with a bank opening balance. Remember that bank opening balance can be debit or credit. In this example, it was a debit balance. Bring down that balance. Debit the bank account with your total receipts. That's the transfer from the cash receipts journal to your bank account. You credit your bank account with your total payments. That's the transfer from your cash payments journal to the bank account. You calculate the difference between the two sides. That is your balance carry down, 108,565. And the 1st of April, you will have a new balance of 108,565. In your last step in your process of bank reconciliations, guys, you take the balance in the bank account and we transfer that now to your reconciliation statement. And you will say now that there is a debit balance as per bank account. In the last step, guys, you take the balance as per bank account and you transfer that to your reconciliation statement. Under your details, you will write the debit balance as per bank account. And our debit balance is the amount of 108,565. The balance in your bank account, you bring that now to your reconciliation statement. We're going to add up now our debit side and our credit side in our reconciliation statement. If you add up the debit side, it is the 15,000 plus the 900 plus the 6,700 plus the 500 plus the 55,000 plus 108,000 Rand, and that will give you a debit amount there, guys, of 186,186,665. 186,665. You add up the credit side, guys. Add up the credit side. 181,665 plus the 5,000, and that will give you 186,665. So you can see that the debit side is equal to your credit side, and your bank reconciliation statement will then balance. Okay, guys, that is the end of that example, the example of bank reconciliations. Just follow the steps, guys, and you apply it to the question, and then you will see that you will not have a problem. But just remember, guys, we just need to practice a few of these questions, because you can see that in exams, guys, if you take a look at the past FAC 1501 exams, that bank reconciliation statement is always there. It's quite a popular topic for your exam. So you need to practice quite a few of these questions. Right, guys, in your notes, we are tackling the next question, guys. The next question that we will tackle, that is the May-June 2011 paper, May-June 2011. And it is a business there called PG Traders. The May-June 2011 paper, guys. It's a business called PG Traders. I'm going to do that question now with you guys. Just before I start with this question, guys, I will give you guys an opportunity now. If there's any two of you guys that has got a question at this stage, guys, you can go ahead. You can ask me those questions.
Sorry, sir. Morning.
Good morning to you.
How are you?
I am so well, but you can go ahead with your question.
No, man. It's just a question. You did not email me that the notes for today. I checked all my emails.
Okay.
Yes, I didn't receive your notes for today, sir.
Okay. And what is your name?
It's me, Yokesa.
Yokesa.
Yes, sir.
Okay, Yokesa. I will just check now. I am 100% sure that I have emailed it. Okay,
No,
you
sir.
must perhaps just check your spam. It could be that it just sometimes go into your spam, but
Okay.
it was issued to you. Okay.
Okay, sir.
Right. Any other questions, guys? Nothing else? Right. Let us then, guys, let us take a look then at the next question that we're going to do. And I'm going to do the question then, guys, on the May-June 2011 paper. And I'm going to do the question there on bank reconciliations. Right. It was question 3 in that question paper. Yokesa, remember, if you go onto Teams and you go to files, I have also uploaded the question there for today. Okay. The questions that we are working on is there. If you go onto Teams, just click on the icon for files. Under your files, you will see that the work for today is there. It's called lecture notes for lecture number 8. Right, guys, I'm taking a look at the May-June 2011 paper. It's a business called PG Traders. And let us tackle that question quickly, guys. Go to your required. It's always the same, guys, for bank reconciliations. They tell you there, guys, complete the cash receipts journal and the cash payments journal, 7 marks. Prepare a properly balanced bank account for 8 marks. And complete or prepare a bank reconciliation statement there for 10 marks, guys. The question counts 25 marks. We go back now to the question. You are given the following information for PG Traders for the month ended the 31st of January 2011. So they gave us now December's reconciliation statement, which is now the previous month's reconciliation statement. Let us just quickly speak about that information. Last month, there was an outstanding deposit of 5,000 Rand. Last month, there were 3 outstanding checks. Check number 212 for 1,500, 221 for 900, and check number 223 for 2,000 Rand. And then last month, on the 31st of December, there was a debit balance on your bank account. You must bring into account the information from the previous month. So the important thing here, guys, is that we must work with the outstanding deposits. We must work with the outstanding checks, and we must work with the balance in your bank account. So you can immediately go to your bank account, guys, and they tell you that there's a debit balance in your bank account. And the debit balance on your bank account is the amount of 10,600 Rand, and you record that in your bank account. That is your opening balance on the 1st of January. Remember, your bank account, the balance on the 31st of December is given to you, but that is also the balance on the 1st of January, which is the balance on the first day, the next month. Right, now we're going to go through the information as applied to you guys now, from number 1 down to number 5. I'm on to number 2 now. the bank statement had a favorable balance on the 31st of January. That is the balance on my bank statement at the end of the month. So I go to my bank reconciliation statement. A favorable balance is a credit balance. You must know that. Remember, I told you sometimes they don't tell you debit or credit. They will speak about favorable or unfavorable. Right, we've got a credit balance on our bank statement, and our credit balance on the bank statement is the amount of 12,000 Rand. So in your reconciliation statement, you will record there credit balance as per bank statement, and the credit balance on our bank statement is the amount of 12,000 Rand. I'm going on to number 3 now. The total for the cash receipts journal was 10,200, and the total for the cash payments journal on the 31st of January, before the bank statement was received, they give you those amounts. So record that in our cash receipts journal and our cash payments journal. In our cash receipts journal, there was an opening total, starting total of 10,200 Rand. Whereas in my cash payments journal, there was an opening total there of 9,800 Rand. Okay. That is the information, guys, under number 3. Information under number 3. I'm on to number 4 now. After a comparison of the bank statement with a bank reconciliation statement as at the 31st of December, which is last month's reconciliation statement, the one on top there under number 1. And after we compared with the cash journals, the following was noted. A deposit for 5,000 appeared on the 3rd of January on the bank statement only. Now, just go back to last month's information, guys. Last month, you will see there is a 5,000 Rand that they speak about credit outstanding deposits. Now, that deposit was outstanding on the 31st of December, last month. It was outstanding because it was in our records, but not yet on the bank's records. Now the bank must record that 5,000 Rand because it was outstanding last month. It is now reflected on the bank statement on the 3rd of January, so no entry is necessary. That one cancels out last month's outstanding deposit. Also last month, guys, there were 3 outstanding checks, 212, 221, and 223. Check numbers. Those checks were outstanding. Now take a look at the information under B. The following checks appeared on the bank statement only. Check number 223 and check number 21. So those are the checks, guys, that appears now. It was outstanding last month and it appears in this month's bank statement. So for those 2 checks, no entry is necessary. But we must still account for check number 221 for 900 Rand. And that we will record in our bank reconciliation statement. You are going to write there, debit, outstanding checks. And from last month, number 221 for the amount of 900 Rand is still outstanding. So guys, let me just quickly explain that process to you guys because many students get confused with that one. A check is valid for 6 months. So by the time that you are writing out the check, If you are writing a check out to Mr. A, Mr. A has got 6 months to go deposit that check. If you issue a check now to Mr. A on today, which is the 6th of May, and by the 31st of May, he has not deposited that check as yet, in your bank reconciliation statement, you will write there, credit outstanding checks. By the end of June, if he has not deposited that check as yet, that check is still outstanding. So in your bank reconciliation statement, you will record again, debit outstanding checks. If he has not deposited by the end of July, it is still outstanding. It hasn't gone through the bank as yet. Some textbooks call this now checks not presented for payment as yet. It's outstanding. It hasn't gone through the bank. A check can go through it can be outstanding for a period of 6 months, guys, because a check is valid for 6 months. So last month, there were 3 outstanding checks. 2 of those checks came through the bank. However, check number 221 was not deposited as yet. Therefore, check number 221 will still be outstanding. So, when you do the reconciliation statement for this month, you will have to indicate that one of the checks of last month is still outstanding. And that is how you will record that one. Okay, guys? I am going on to, guys, I'm under 4, I'm busy with 4, and under number 4C, I am speaking about the bank charges. Bank charges is 150 Rand. Bank charges I record in my cash payments journal. In my cash payments journal, I will indicate my bank charges for the month. And the bank charges for the month is the amount of 150 Rand. I'm on to D, guys. A check for 700 Rand, which was previously received from a debtor, was dishonored due to insufficient funds in his account and therefore returned by the bank. A dishonored check, guys. Dishonored checks we record in our cash payments journal. So in your cash payments journal, we received the amount of money there from a debtor. We'll record that now as a dishonored check. Or unpaid check. And the value of that dishonored check, guys, is 700 Rand. The dishonored check must be cancelled with an entry in the cash payments journal. The next one, guys, I'm under E. A client deposited 6,000 Rand directly into the entity's bank account, a direct deposit into my cash receipts journal. You will have the direct deposit. In some instances, they will tell you who made the direct deposit. Then you will just put the person's name there. In this instance, they don't tell you. So you will just have a direct deposit there of 6,000 Rand. So guys, I'm done with the items under number 4. Under number 4, it was a comparison with the items of the bank statement and the bank reconciliation statement. And as so under number 4, after a comparison of the bank statement with the bank reconciliation statement as at the 31st of July and the cash journals, the following were noted. So those were items under number 4, items that appeared on the bank statement and not into our records. And that is why we are updating our records. And we are having entries in our cash receipts journal and in our cash payments journal. I'm on to number 5 now, guys. Information under number 5. The following items appeared in the cash journals only. These are items that appears in the cash journals. It's not on the bank statement. So we record this now in our bank reconciliation statement. There was a deposit of 6,500 in our records, not on the bank statement. Go to your reconciliation statement. You will write there, credit the outstanding deposit. And the outstanding deposit that we will credit there, guys, is the amount of 6,500. Credit outstanding deposit, 6,500. B. Those were also items that appears only in our records, not onto the bank statement. There were 2 more outstanding checks. So we will debit our outstanding checks. Remember, 221 is coming from last month. And for this month, 230 is outstanding with the amount of 1,000 Rand, as well as check number 234 is outstanding, and check number 234 is for the amount of 450 Rand. So guys, the information under number 5, that is the information that appeared only in our records, only in the cash journals, not on the bank statement. To rectify that now, we had to record that now in our reconciliation statement. Credit your outstanding deposits, and you will have to debit your outstanding checks. Right, guys, we are done now. We can now close off now the question. So in your cash receipts journal now, you add up now the cash receipts journal, and if you add up your cash receipts journal, 16,200 is what you will get in your cash receipts journal. You add up your cash payments journal, and when you add up the cash payments journal, 9,800 plus 150 plus the 700 will give you the amount of 10,650. 10,650. You transfer that to your bank account. Your receipts now from your cash receipts journal, 16,200. Your total payments is the amount of 10,650. Remember, we are with a step busy now that we must now complete our bank account. We must prepare a bank account. You prepare the bank account, start the bank account there with the opening balances, transfer the cash receipts journal to the debit side of the bank account, transfer the cash payments journal to the credit side of the bank account, add up the amounts now. Add up the debit side, 26,800. Record that now on the credit side also, 26,800. You are now going to calculate now the difference between the two sides. And the difference between the debit side and the credit side now, guys, is an amount of 16,000. 16,150. 16,150. Down the new balance. On the 1st of February, on the 1st of February, guys, you've got a new balance. The balance in your bank account. You start the month with a balance of 16,150. 16,150, that is your new balance now in your bank account. You have now balanced your bank account. Go to your bank reconciliation statement now. You transfer that balance now to your bank reconciliation statement. You will say that there was a debit balance as per bank account. Debit balance as per bank account. Your debit balance is 16,150. Debit balance as per bank account. And now you just add up the debit side and the credit side. You add up your debit side, it's the 900 plus the 1,000 plus the 450 plus the 16,150, giving you an amount of 18,500. Add up your credit side, 12,000 plus 6,500, that is giving you 18,500. And you will see that in that question, our bank reconciliation statement there, guys, will balance. Right, guys, that will conclude then the session for me on bank reconciliations. Remember, guys, take the information that I've given you in that PowerPoint presentation. That is the theory that you must know. I've applied that theory now to 2 questions now that I've given you. One was that example, and the other one was the May-June 2011 exam. I've also given you guys in your notes another question or 2, guys, from past papers. But in order for you to be successful in bank reconciliations, which I have indicated to you guys earlier, that it is quite a popular topic, you need to practice this continuously, guys, until you've got it fully under the knee and you know how to do that. Okay, right, guys, at this stage, are there any other questions?
Hello, can you hear me?
I can hear you, Azafile.
Okay, I have a question, but for like the last session that we had, it's not related to this one.
Okay, you can ask.
I just want to understand something when you calculate the selling price, because the example that you made last week, you used the markup cost and you divided it with 100 and then you multiplied by the cost price that you had. But when I check on the textbook, it's done differently. They add the markup cost to the 100 and then they divide the 100 into when they say, for example, the markup on cost is like 30%. So they add the 100 to the 30%, then they divide the 100.
130, and
yes.
Then you must take 100 divided by 130.
130, yes, and then you multiply.
Okay, right. Can I just explain to you?
Okay.
There are two ways in which they can ask a question like this. Should they ask you a question like that now?
Okay.
Right. Sometimes they ask you, and it all depends on the information that is given to you. Sometimes they will give you they will tell you what is the profit percentage on the cost. And then sometimes they will give you the profit percentage on the selling price. You've got a calculator and you've got a pen there, and I'm going to take you now back, and I'm going to take you now back to the question.
Okay.
The question told you that the markup was 75% on the cost.
Yes.
You okay with that?
Yes.
So if markup, now remember, markup is the profit.
Yes.
Okay. So the profit is 75% on the cost. So
Yes.
in the question, they gave you the cost price. Is that
Yes.
so?
Yes.
And how much was the cost price?
200,000.
200,000.
Yes.
Now look at the adjustment. The adjustment tells you that the profit is 75% on the cost.
Yes.
So all you do is you take 75% of the cost price. And what is 75%? 75 divided by 100.
Yes.
So now you have calculated the profit. So
Okay.
75% of 200 is a profit of 150,000. Are you with me?
Yes.
Therefore, selling price is therefore 200,000 plus 150,000 rand profit, and it is now selling price
350,000.
therefore 350,000.
Okay.
That is what I explained to you and what will apply to last week's question. Now
Okay.
I'm going to give you a different scenario, what you are looking for. Okay. Are you
Okay.
with me?
Yes.
Right. If I tell you sales is 400,000 rand,
Yes.
okay? So the sales figure is given to you.
Yes.
But cost of sales, I don't give to you.
Okay.
And I tell you that the markup is 25% on the cost.
Okay.
Now, I gave you the sales figure.
Yes.
Now you must understand that that sales figure is equal to the cost of sales plus the profit. Are you still with me?
Yes.
So now you must calculate your cost of sales. So if you must
Okay.
calculate the cost of sales, you will take the 400,000 and you multiply it now by 100 divided by 125.
Oh.
It
Okay.
all depends on what is given to you.
Okay.
In the previous question, you had to calculate sales.
Oh. Okay. Okay.
So 100% was given to you,
Yes.
which was the cost of sales.
Yes.
In this example that I'm giving to you now, I'm giving you the sales figure. And the
Okay.
sales is 125. Now you must calculate what is 100%. You get it?
Oh, yes. I understand now.
It all depends on what is given to you. Sometimes they give you sales, then you must calculate cost of sales. Sometimes they
Okay.
give you cost of sales, then you must calculate sales.
Okay. Thank you.
Right? All clear?
Yes. Yes. Thank you.
Right. Okay. Any other questions, guys? It doesn't look as if we've got any questions. It looks like you've got it all under control, guys. Guys, this was my last session then also for FAC 1501. I wish you well with your exams. We haven't received any confirmation yet as to what the exams is going to look like. So you guys must just wait for that confirmation, guys. And then I will also post, I will email you guys now the solution to today's questions on bank reconciliations, guys. And I can only wish you well for the exams, guys. And just practice and practice and practice. And then you will see you guys, your exams will not be so difficult. Enjoy the rest of the afternoon, guys. Good luck to you. Bye.
Thank you, sir. I did get your email. Thank you. I checked now
Oh,
with
you
my junk
received
mail.
it.
Yes, thank you,
Okay.
sir. Sorry for that.
Not a problem, okay, sir. Okay.
Okay, thank you. Bye-bye. Have a blessed one.
Okay, you guys do enjoy. See you.